Hi and welcome to today's price action analysis video of Nifty and Bank Nifty. We are on the Nifty screen and this is the 5-minute chart of Nifty. This is 17th of April 2023 and let's see how Nifty opened today. So Nifty opened below the L4 pivot today and it opened between L4 and L5. Now these are the candle level pivots, alright? So don't get them confused between the floor pivots and the candle level pivots. And these are the candle level pivots where the S1 pivot indicates the S1 and S2 are the pivots that indicate the floor pivots, and the L4, L5 levels are the ones that indicate the candle pivots. And what have I marked here? I've marked a demand zone, and this demand zone was coming from historical price action. And now let's see what the CPR was telling us. The CPR was a higher value CPR compared to the previous day, and since the previous day's close was above the CPR of the previous session, then what was the bias today? The bias would have been confirmed bullish had the price action shown us an open above the CPR or anywhere above the bottom central. But that did not happen today, and Nifty gapped down and opened here, and it was opening uh, almost around the PDL, the previous day low, and it actually closed below the PDL and also the S2 pivot. You can see the S2 pivot is here in the very first candle, and because of that the Nifty immediately had a bearish trend tilt to it. So because of that bearish tilt, it was going to be difficult in Nifty to look for long opportunities. But see, when you happen to see Nifty breaking out of a particular zone, see, this is the previous day's zone, right? So the previous day's zone is very important. If you see one index breaking out of the previous day's zone, then you should also see what the other index is doing. In the live session that I conducted, even there I had answered that even if one index, if one index is confirming the bias and the other is rejecting the bias, then what do? Then you should look to trade in the direction of the larger trend of the market, is what I had said. So what happened here? Here you should not look to go short immediately after seeing such big red candles. It is a mistake to do that. Running behind price you should never do. And I have always preached on this channel and taught on this channel that you should wait for the right kind of price action at the right levels to trade. Just because you see some big red candles, it doesn't mean that you go down shorting at every level that you see, and exactly inexperienced traders get caught in those situations. This is exactly what inexperienced traders will do. They will look at these big red candles and they will look to short at every level. So they are short on every level here, and then they tend to get caught when price reverses, when market reverses. So that is the reason why we use all these levels like the CPR, the H3 L3 levels, the H4 L4 levels, the S1 S2 R1 R2 levels, right? These are the levels that have their or bear their values from the previous day's price action, and that's why they are absolutely crucial in trading. Now I had marked this demand zone prior, correct? So one thing I knew for sure was, even if market did fall, it will fall right down to the demand zone, where we would be able to see or might be able to see some sort of reaction in price, where we might be able to see a bounce. Now I've always said to you that it doesn't matter where the market opens. The market will open, the open of the market will be influenced by SGX Nifty. Okay, and SGX Nifty will be influenced by the American markets, that are the mother markets. So that is why only the open will be derived from the SGX Nifty. That doesn't mean that our markets also will carry the same sentiment. Time and again I have said that. And so let's go to the Bank Nifty chart for a while and check what Bank Nifty did. See, Bank Nifty had confirmed our bullish bias because it had opened between H3 L3, and the H3 L3 were higher value, as well as the CPR was also higher value, and the fact that CPR was very wide today. So wider the CPR, the more difficult for price to penetrate through it. And you can see that the very first candle itself had made a very wide range here, isn't it? So when you see this, when you see Nifty falling, then you should know that there is a big wide CPR below the Bank Nifty chart, Bank Nifty price rather. And so that is why you should avoid trading short in Nifty in such scenarios. Even if you see this bigger fall, you should let it go, because you never know when such falls will reverse. These are false falls, and these falls will usually tend to reverse sooner rather than later. And since the open was above the CPR and the previous day's close was above its CPR, you would definitely be sure that the day was going to be bullish today in Bank Nifty, because Bank Nifty was confirming the bias. You can see the CPRs are higher value in comparison, and the close of the previous day or previous session was also above its CPR, and today's open was also above its CPR. So it does not matter even if it forms big red candles. It doesn't matter. These candles, this is the way price falls, you should let it go. Don't go shorting at these levels. There is no reason to panic and suffer from FOMO. So you should let such falls go. It is immaterial. Such falls don't mean anything. And what should you do? You should wait for the right opportunity to come. And what was I doing today? I was going to study the price action at the level of the CPR. More importantly, the central pivot zone. So what happened here? Price made a very wide first candle range, and then it broke down of that first candle range in this candle, and then it broke down in the same flow. It broke the L3 pivot also, the L3 Camarilla pivot, which you can see coinciding with the central pivot. So today we had the PP plus the L3, which is a very powerful zone. And this candlestick pattern had this been formed immediately after the L3 was broken, like if you see that, then we have another candle here, right, which is a red candle, which is not exactly a very strong candle, but not a very weak candle either. For a doji to be formed, we need something like this, which is a weak doji, but this is not a very weak doji. It is not a very strong candle, agreed, but it's not a very weak candle either. And it had broken below BC also. It closed below BC, and then it formed this green candle. Now if you have to have a reversal pattern, it should reverse immediately after closure. After this closure, it should reverse immediately, or at best it should form a doji here, and then this green candle must close above this particular L3 pivot, which was going to be my entry signal. And again, this was also not an outside bar pattern, because this green candle's low was not lower than this red candle's low, and that is why I had not initiated any trade on this particular 3 candlestick reversal pattern. Which you want to see what kind of reversal patterns I use, you can go to the masterclass and you can check. I have posted the masterclass a few months ago. In that I have written about all the candlestick patterns that I follow. You can study those from there. And so what was the candlestick pattern I was looking for later after this candlestick pattern was formed? I was looking for 3 white soldiers, and you can see that there was a 3 white soldiers pattern here. And I had also tweeted about this at that time, that the price really, actually after closing here above the L3, my entry is after the price closes above the L3, and I'm a very strict trader as far as position sizing goes. So my risk reward was there, but today it didn't fit in my position sizing. Where should my stop loss be? Ideally my stop loss be here, should be here. And then where should be my entry level? So ideally my entry level should actually come where there is a closure of the candle above the L3. So where was the L3 pivot? This was the L3 pivot, and you can see that the candle closed above it, which was this candle, the 10:15 AM candle. But then I waited for the price to reverse back to at least the L3 to give me an entry level, but price did not give me that. And I remember that the price was around 242 that I wanted to sell at, and I kept an order open at 242, but price actually made a low of 241.05 after closing this, right? So I wanted to write this option, so I wanted to sell option. You know that I do directional selling, I do directional option writing, and that's why this was the price that I was waiting for. You can check on the options chart also. That was the 41,900 put option that I was trying to sell. So it was this strike price around that level, and 41,900, you can check it, it made a low of 241.05. But the problem was I kept an order open there, but before that you can see that this is a very strong candle. It doesn't have any wick below it, and it opened and just shot up. It was a very strong green candle, and after that this was the level where my order book was, my order was open in my order book, and this was where my stop loss was. So ideally that should be my stop loss, but then because that was a bigger stop loss, I had placed the stop loss a little bit above and around the just below the BC. somewhere here my stop loss was there, because I could not put it right below. So I put it up a little bit, and this was around 100 points in on the spot chart. So I was taking a 50 point stop loss on the options chart, and so my 100 rupees was my basically was my target. And I knew that the price would give me my target, because my target was at H3. So this was the level where I was looking to book my profits, and you can see that it almost went to H3. But anyway, after selling option, I wouldn't have had to wait that long, and 1:2 was achieved right here at the peak itself. But the problem was, I never got an entry, and so I never really entered the trade today. And had this candle closed above, like in this candle itself, the very third candle itself had closed above this level, which was the third candle in terms of this particular combination, and had it closed above the L3, I would have definitely gone long immediately on the closure of that candle. But here it did not happen, and my order stayed open. What I normally do is I put a limit order. I never work on market orders, so I always put limit orders, and that is why I work very strictly with risk reward and position sizing. And so I did not enter, but I'm fine with it. I do not suffer from FOMO. I'm fine, because I know that even if I make around 5% per month, that is fine for me. And so I always find it easier to let price go whenever it is running away, and I never chase price. And so we do find in Bank Nifty that we have a closing above today's CPR. But now going back to Nifty, you could see that Nifty bounced from here, and it made a very nice morning star pattern. It was a textbook morning star pattern, this in Nifty. But the problem was, there was no important level in Nifty for me to trade on. Now, where are my important levels to trade? My important reversal levels to trade are the L3 and the PP, and the L4 pivot if I see that price is taking support at that level. But since price had not closed above this L3 PP, because once this L3 PP is broken, if I enter here after this candlestick, even if it had shown me a good reversal pattern, even if I would have entered here, I would have been doubtful whether price would be able to cross this level, because once a support now will become a resistance. So L3 PP would now have acted as a resistance now, once the price had broken the L3 level. So now the price was coming back from BC, and the L3 PP might have acted as a resistance, and price might have continued to fall. That I did not know, because you see price had actually made a wide initial balance in the first 1 hour. This was the first 1 hour, and that was a wide initial balance. So had price pulled back to the central pivot and went on falling, that would have led to a trending day. And on trending day, you would usually find a wide initial balance. Another day you would find a wide initial balance is when that day is going to be trading in a range. So like you saw here, is traded in a particular range, right? So after the 1 hour high low was made, this high low have been these high low have been intact. They have not been broken through the entire day, right? Price traded right between the high low, and they have not been broken. Similarly, you can see in Nifty also that the high low was never broken. This was the first 1 hour high and low, and that high and low was never broken. So it was a ranging day today in Nifty. It traded in a particular range, and the reason for the bounce here is Bank Nifty. So since Bank Nifty bounced from this after giving a particular false breakout at the CPR, it reversed, and so did Nifty. And that is the reason why I keep telling you to observe both Nifty and Bank Nifty. So no particular trend in Nifty, and yes, and today, I mean, no particular trend to be traded in Nifty, because Nifty had initially, I mean, the initial balance in Nifty was what? The bias or the outlook was bullish initially before the day opened, but after the open, the bias turned. I mean, was the bias accepted? No, it was rejected. So the bias had turned negative, especially after price had opened way below the L4 pivot. And so where would be the best place to trade in such a scenario? If both Nifty and Bank Nifty hypothetically had opened below the CPR and both would have rejected the bias, the best place would have been had Nifty taken support somewhere maybe at the L6, pulled back, and here after it came, it might have shown some reversal candlestick pattern, this being a red and a green candle, so maybe an outside bar or an evening star. Then somewhere here around the L4, after the pullback, you could have traded short here, because you would have had the day high also here. plus the L4 pivot. So then you could have traded short in Nifty, especially since Nifty had rejected that bias. But I had already told you in the live session also that if one of the index is accepting it and the other is rejecting it, then go with the wider trend of the market. Check for the wider trend of the market and then go behind the trade. Do not run behind price when it's falling just because you feel that okay, today is going to be a big fall. Don't run behind it. It's not the right way to trade. And also the safer way to trade is after the central pivot is broken. So after a candle closes above the central pivot and this GPZ, the golden pivot zone. What is the golden pivot zone? This particular zone, the L3 plus the PP. After it is broken from the downside, after price reverses and closes inside, this is the place where you should look to go long, not this particular candle, not the green candle. Because what will happen is if you trade without confirmation, maybe out of 10 times you will be right 5 out of 5, but again on the 5 out of these 5, if you're buying an option, maybe 2 to 3 times the price will probably spend so much time going sideways here many times that target will never be achieved and you will keep losing theta in this case if you're buying an option. So be very sure that you have a good rally. Now here the rally came, yes, but that was a lucky rally in the initial stage itself. Had this closure been here, right here like this, then it would have been a much more serious, a much more sensible trade to take here, and this trade would have been seriously well, because then you would have seen a good rally in price right away. But you can see that buyers were applying some force there, some pressure there. That's why price spent some little time going downwards and then it reversed. Yes, today it did go up nicely, but many times, like I said, maybe out of 10, maybe 7 times out of 10, you might see that the price will not achieve the target if you're buying an option, and maybe only 2 or 3 times it will give a good risk reward to you. Many times you might not get a good risk reward buying options. Option seller, it doesn't matter anyway. For an option seller, the price, even if it is going sideways and not going up and keeps continuing doing this for the entire day, he's going to get the theta out of it. So even if he enters here and let's say the price action actually shows a closure here, that is also fine. The option seller will make immense amount of money there simply because of theta decay. So now let's go ahead and check what sort of CPR we have for the next session. The upcoming session in Bank Nifty, we have a CPR which is higher, obviously, because we saw a good trend in the market today to the upside. So we have a higher value CPR, and we also see the Camarilla levels higher. So you can see the H3 level here, which for tomorrow we have here, and L3 is here, which today we had here. So you can see if I draw a box here, then this is the Camarilla level for tomorrow, which is overlapping higher value. So as long as we have any sort of open here above this particular BC, anywhere above this zone, you can have a bullish bias tomorrow as well. But be careful, tomorrow the CPR might not act as a very strong resistance. It is a very narrow CPR in Bank Nifty, and we have very big gaps between the H3 and L3 pivots. So be careful trading. You might want to wait for a pullback down to the L3 level to be able to go long here. So the L3 might be the best place to trade tomorrow, but it will all depend on where the price opens tomorrow. And in Nifty, let's turn on the next day CPR indicator. You can see that on this indicator, you can see that Nifty also has a very narrow CPR, and you can see that the CPR in Nifty tomorrow is lower value. It's a lower value CPR, and chances are that price might open above it, which will mean that the price will reject this. But don't forget that immediately above this we have a virgin CPR here. Although it's not a very wide virgin CPR, but we do have it on top. So the virgin CPR, and you can see here, I'll just zoom it up a little bit, and you can see here that the H3 pivot being right here, you can see that the H3 and virgin CPR are together, and then this is the L3. So you do have a strong resistance, H3 being at the same level at the CPR, plus you can see that the PDH is also around the same level. So this is the PDH for tomorrow, and that being very close by. So you have the H3 here, the PDH right there, as well as the virgin CPR coming in at the same level. So you might want to be very careful at that level. So 17,800 tomorrow will act as a strong support for resistance for price. So the resistance will start somewhere around the 17,770 mark, and it will go up to the 800 mark. This is the 17,800 mark. So this might act as a strong resistance zone in Nifty tomorrow. These 30 points will be crucial tomorrow. And if the price actually opens below tomorrow's CPR, then you definitely have a bearish bias to the market. Then what you can do is you can look for a pullback towards the upside, where you can look to short somewhere at this level. So you can look to trade short at this level, and then you can book your profits according to your price action, that is your risk reward. So that is how you should be able to trade. And if the price opens here, don't run behind price. You have the L3 support here. So if it opens here, don't trade at the L3 level. Don't trade for a bounce here. You will have to see how and what price action is showing. So tomorrow, just be very careful. I might upload or update you on Twitter or Telegram, depending on what my bias is tomorrow. So it might be a confusing bias tomorrow, because one is showing upside bias while the other is showing a downside bias. One will be rejected, one will be accepted, obviously. So I would suggest you to trade in the direction of the larger trend. But since tomorrow, I mean, the difference between today and tomorrow is that yesterday we had today we had a CPR which was elevated anyway. Now today the CPR itself is showing us a negative bias or a bearish bias in Nifty. So that is going to be a difficult matter now tomorrow, because today the difference between today and tomorrow is going to be that the open today was below the CPR, whereas the initial bias was bullish. But here the initial bias itself is bearish in Nifty, and here the bias is bullish. So today we had the same initial bias that was bullish in both Nifty and Bank Nifty. Tomorrow we have opposing biases itself. The initial bias itself is opposite. So that's why the open will be crucial, and that's why you will have to wait for price to show any sort of correct reaction at the correct levels. And we will see tomorrow, depending on the price action, you'll have to take a decision which levels to trade on. Either is it the H3 or the L3, or the as I said, the strong zone in Nifty, which is the Virgin CPR. So that is a decision you might have to take in the live market tomorrow. So I hope this is clear for you, and that is a good explanation as far as tomorrow's price action is concerned. If you've liked the explanation, do hit the like button, subscribe to the channel, and please hit the bell icon so you're notified every time I post a new video. And I can see that nearly 50% of you who watch the videos have not subscribed. It's easy, guys. It's free of charge. Please subscribe. It helps me. It really helps me. It boosts my confidence. And having the number of subscribers, it tells YouTube that people are liking my content, and I'm really working hard here for teaching all of you guys. So guys, please, if you're watching my videos and you're not subscribing, that is not fair. Try to subscribe. Subscription just helps the channel reach out to more people, so more fellow followers will be helped, and those people who want to find me will find me easier. There are people who have not found the channel yet, just because probably the algorithm doesn't push the channel much. So please, your subscriptions will be crucial and vital for me. Thanks guys. I'll catch you in the next one. Bye bye.